Morning everybody, welcome to the weekend general update for the 15th and 16th of December. In the last week we haven't seen a great deal of movement. Markets have been fairly static. There's been a few stocks that have done well, but basically we've got a balance in the States between a fairly positive sentiment and good economic data and the ongoing concern about these silly politicians and what decision they may or what agreement they may eventually come to. So let's get on and have a look at the action for the week. Just a reminder about the general advice nature of this information. So the S&P ended up falling 4 points on the week, but I guess the more promising thing in the start of the week was that it broke through the key resistance level at 1425 and broke through there fairly readily before reversing back into the trading range. So it's really just indecision in the States. But as opposed to earlier in the year where the States was clearly the outperforming stock around the world, it's pretty much the underperforming stock now, and we've got stock markets in Germany, in Europe, and in Asia outperforming the US. So it's really, I think, as long as the US market stays reasonably steady, then sentiment will be fairly positive, and the other stock markets around the world can get on with doing what they're doing. So to me there appears to be little chance of significant downside. I think that's the key, and that's one of the good things about trading in these conditions, that we don't have that risk of a sudden sharp move to the downside. It's not to say that we won't get little corrections along the way, because we will, but I think that chance of a big move has been eliminated, and therefore good stocks can move ahead on their merits rather than being held back because people just weren't game to invest in them. So the upside, however, is being capped in America by this fiscal cliff, but it's very obvious in Australia that we're starting to detach from the American market. So our market ended up gaining 31 points on the week, and it was a huge week for the Shanghai Composite, and that's a market that's been lagging all year, and it's been an enormously sharp turnaround. So I think that's a very good indicator for our market. And subsequently there's been a big sector rotation into resources, so some money coming out of the banks, although not a great deal, a little bit of money coming out of Telstra, but certainly there's been money going into BHP and Rio and the resources sector in general. Now the US dollar was down sharply on the week, and the counter trend rally that went up to exactly the 61.8% level and then rolled over, so that the technical patterns on the US dollar are really behaving themselves very nicely. Bond yields in Europe continue to ease back, which is indicating that there's just not very much in the way of fear in Europe anymore, despite the fact that a lot of the doom and gloom merchants around the place will tell you how terrible Europe is, and therefore stock markets have got a crash as a result. Don't listen to those people, because they're just scaremongering, trying to sell their product. It's you just got to look at the facts rather than the emotions. Spanish yields now, which were up over 7% when things were pretty ugly, are now down to 5.4. Italian yields are now down to 4.6. So there just really isn't the fear in Europe that there's going to be something significantly happen over there. Gold dropped by $18 on the week. There's just some pretty blatant manipulation of the share price going on, but I think everybody knows that, and the sad thing is that everybody's just starting to accept it now as par for the course. But eventually markets will win out over the vested interests of people like the Fed and the major investment banks, who are, I think, in cooperation with them, and eventually we'll see gold significantly higher, but who knows when that will be. But in the meantime, gold stock indices rose a little, and the good gold stocks are just getting on with business and they're making progress, and over time the market will re-rate those gold stocks substantially. The gold stock indices internationally seem to have based. We'll have a look at that in a minute. Copper, also another really strong indicator of just how relatively well things are going on a global basis. Sitting up now at $3.65 a pound. It's not really that far off its all-time highs, so copper certainly not indicating that we've got a problem. Oil steady at about 86. I think if anything, oil is likely to continue in a slightly downwards direction because there's just so much abundant energy being produced in America now that it's really hard to see oil back above $100 a barrel, and we could in fact see oil down more like $50 a barrel over the next year or two. There's just so much oil and gas being liberated in America now. So let's have a look at some charts. So we'll start first of all with the Shanghai Composite Index. So let's just pan back a little bit, and you can see it's been in a very substantial decline from around 3,400 points, got down to under 2,000. Now the thing about this Shanghai Index is this can't be traded with overseas money. This is an index that reflects the buying of the local Chinese population. So whilst America's been going up and Australia's been going up to a degree and most markets have been rising, the Shanghai's been copping an absolute hiding. But look at the last week to 10 days. This has been a massively sharp reversal, and we're also seeing a significant lift in the amount of electricity production in China, and there's a very strong correlation between the economic well-being of China and the amount of electricity being produced. So terrifically sharp rebound, particularly on Friday. So I think that's very positive for Australian markets. This is the S&P. On the week it didn't do anything. It spiked up above the 1425 level, which was great to see, but then reversed back into the range again on Thursday and Friday. So for me, this is really just moving in a sideways direction at the moment. Turning to the US dollar index, we had a retracement of the game. So let me just wind back one. We had a significant fall from around 84. We got down to 78. We then retraced exactly 50% of that. If we come across to this level here, you can see 50% of that fall from the 24th of July to the 14th of September. The market took back half of it and then started to roll over. So the big picture is down, and that will be positive for stocks. And that's where the Fed wants the US dollar index anyway. They want it weaker. Now we've had a run back down, and we've then got an almost perfect 61.8% retracement of this move. So it's bounced back up to there. It didn't quite make it, but it got close, and now it's started to roll over again, and we had quite a weak period last week. So that's the dollar index. Looking at gold, you can see gold really just consolidating. That's on a weekly chart, so it's really just been consolidating for quite some time now. And as I said, eventually the break will be to the upside, and I still maintain significantly above $2,000, but that will happen when market forces overcome the vested interests. Just having a quick look at silver. Silver eased a bit last week, so just underperforming gold a little bit in the short term, but silver will also have its time to the upside as well. Let's have a look at the HUI index. Seems to have bottomed now. We've formed a series of equal lows, so I would think that from here the direction is up, and almost invariably the stock indices start moving before the actual price of gold does. So don't be surprised if we see gold stocks start to make a run in the immediate future. Looking at the Australian index, just for the record, you can see we've had a very strong period over the last 2 weeks, or 3 weeks almost, basically since the 16th of November. So that's been a very strong run in the Australian index, and in particular you can see here resources have done really well in the last month or so. Also, the small cap index in Australia has also done pretty well. As you can see, we've definitely been moving higher now since the lows in mid-November, when that correction played out overseas. This is the 6-month spot copper chart, so that you can see there the all-time highs in 2000 in September of last year, around $3.80, and we're not that far away from it at the moment. So in terms of overall strategy, nothing's changed as you'd expect. The strategy is not going to change around from week to week. We're still looking for a balance primarily between the best gold producers and some of the great non-resource opportunities we have in our country. Whilst there's been a distinct swing back towards resources, I still wish to favour those other two categories over the resource stocks in general at the moment. So that's it for this week, and this will be the final weekend update for the year. So wishing everybody a terrific Christmas New Year period, and we'll talk to you again early in the new year. Cheers.